Hello everybody, hello traders, what's going on guys? Yeah, so I was actually doing my weekend studies on I just like doing my normal weekend studies, right? So I came across this particular price action on v10 index. That was this happened around May of 2025. Yeah. So when I just came across that, I was like, I think I sent this piece of analysis that year on WAP platform, because then we are using WAP platform. I had a kind of a discussion forum for synthetic. So I remember that I sent out this particular piece of analysis on v10 index on WAP. So I'll just let me just open my WAP to see if I'm actually saying the truth, right? So and I opened my WAP, that was actually true. And if you look at the date, this is 30th of May 2025, and what I said was, it is okay to miss hell, but don't miss anything or synthetic pair. And I just laughed. I was like, v10 index, right? And then you can see this was actually the setup. But then what actually strikes right now is that, just as they always say, they say that once you keep doing something consistently, you will gain mastery. Really, you will really gain mastery, because as of last year, this is 2026, right? So this was 2025, so it is actually last year. So as of last year, the way we are trading harmonics is not the same way we are trading it this way. Okay, it is the same harmonics, the same structure and everything, but the confirmation we are using this year is not the same confirmation we are using last year. So last year was based on candle confirmation, but this year is purely based on harmonics, reversal potential reversal zone, Fibonacci ratio. That's all. We don't look at candlestick confirmation anymore, right? So now you can see there has been a series of improvements. So this is the analysis. Look at this is 30th of May. This is 30th of May 2025, and and as a matter of fact, today is 23rd of May 2026, kind of almost 1 year, right? Almost 1 year. Now, this is how we would have approached this analysis, right? This is how you would have approached this piece of analysis. This is how we would have done it, okay? How? Now, first of all, what are you seeing here? I told you guys that if you're looking at for market structure, get your 3 points, your current 3 points. What are the 3 points? First point is this high, second point is this low, and the third point is what? Is this low. Okay, is this low. So let me even start new. Let me just this one. Okay, second point, third point is this low. So these are your 3 points. So you have gotten your market structure. What is the market structure? Bearish, right? Because we have what? We have break of structure here. Okay, we have break of structure here, right? So so it's bearish. So now, after the break of structure, what are you looking at for key level? Key level. Since you are looking to sell, continue in the direction of the market, you're looking for key level at the premium side of the curve, right? Not at this low, but at the premium side, at the high side. So you start from the high, you start to look at for key level. This particular one is mitigated, right? Price tapped on it and then came down. This one is available, so this is the key level we have here. Okay, so this is the key level we have here, right? So you just extend it to the right. Okay, so you wait for price to give us a valid harmonic pattern, and then also mitigate the key level. So price starts to push all the way up. This is April 15th of April, and it came back a little bit down into this low, into this high it broke out from, and then 22nd of April 27th of April, then we entered into the month of May, 2nd of May, 3rd of May, and then price starts to develop. So now what else is happening here? Now, if you look close, you can find out that something is actually happening here. Price have already given us a valid harmonic pattern. Okay, so from this low to this high, this is 1 point. I hope you guys can see this screen. This is 1 point. This is 1.618, right? And for a sharp pattern, I told you guys that for the sharp pattern, the maximum Fibonacci ratio for this C point is 1.618. So price tested 1.618, and what happened? Push all the way up. So I've gotten the C point of the shark pattern, right? So from the look of things, this is looking like what? A very shark pattern. Simple as short. So you start from this high. You can never start from this key level though, but you can start from this high and then you extend it down. Okay, and I told you guys that for the shark pattern, this is X, this place is X, this place is I don't really know why this is happening like this. This is X, this is A, this is B, this is C, and then D. So the B points, it is not required. Price does not necessarily need to test this B point. So price does not necessarily need to test this B point. Does not necessarily need to test that B point. Okay, so it is not required for a valid shark pattern. So right, so now what we'll now do is use our Fibonacci ratio from this high to this low, to this high to this low, and then extend it to what? Extend it to 0.886. So we're going to remove 0.618. We don't need it. We don't need this guy. So we need 0.886 and 1.13 for stop loss. We have talked about stop loss of the sharp pattern. So we say that for the sharp pattern, the stop loss is 2 preceding Fibonacci ratio after the potential reversal zone, and the 2 preceding ratios are 1.0 and 1.13. So your stop loss is going to be between them, right? So you're going to take your entry from this point. You can see that we're no longer looking out for confirmation anymore. We don't care about confirmation anymore, right? You take your entry from there and then your stop loss there. So let's see what happens. Okay, let's see what happens, right? I think this was the point I sent out. Yeah, this was where price is. You can see that I say finally price came down a little bit and then even went up. The model content on RSS on, okay, these ones are other, okay, these ones are other stuff. So when it comes to V10 index, this will happen. Then the price get to that level, dropped, right? And he also came back. He also came back and tried to even take out our stuff. I think he even took out. Let's see what happened. Came back there. Let's see what happens. Okay, so let me even increase the speed to 3s. Okay, let's see what happens. So we got tagged and then price dropped. So at this point in time, we've gotten our stop loss. So what we're looking at for now is our targets, right? So we're looking at for our target. Our target is from C to D. So the retracement, to say retracement are what? 0.5 and 0.886. These are the targets for the sharp pattern, 0.886 and 0.5. So for now, there are other targets, but since you guys are actually, starting out, so these are your premium targets. So this is what we're looking at for in regards to this setup. Okay, we're actually looking at for 4.69 on this trade. So let's see what happens. Okay, let's see what happens. You can see price, it came down. This was that time it came down. That was what I shared for you guys. It came down. Which time frame is this? This is on the daily time frame there. On daily time frame. So it came down, right, and then it pushed up again, came down, and then start to push up. Okay, excellent, right? See, boom, congratulations. Congratulations. So I mean, this is like, I don't know how to put it. Like, if I told you guys that if you can spend at least 3 years on harmonics, your life will not be the same. Your first year, you're going to be making average of $50 to $100 per month. Second year, anywhere between $500 to $1,000 to $5,000 in your second year. Then your third year, that is where everything will start to click. You start to make average of 20k, 10k per trade. Because the scaling method I'm going to give you guys will give you the opportunity to be able to achieve it. Because we're going to follow a roadmap, a 12 months roadmap, scaling plan based on your win rate. So you scale based on win rate. If you have higher win rate, you scale. If you have lower win rate, I'm going to give you guys the methodology. It's not if you're going to follow the roadmap, how you grow your account, the roadmap. So based on your metric, based on your performance, you scale. So there's enough for you guys to actually study. So I mean, isn't this beautiful? Okay, so now to continue in this line of breakout structure, we are anticipating another what? Breakout structure. So we're anticipating another breakout structure, so that price will continue in that direction. So until price takes out this high, we are seeing clearly what? Bearish. Okay, so let's see what happened. See what happened, right? Multiple times. Finally broke with what? Candle close. So this was what really happened, and it was a beautiful piece of analysis. And then something else also happened this year again, 2026, the same v10 index around the 1st of January. I also sent out the signal again after this point. Beautiful. One of our members also caught this beautiful trade. So when it comes to high probability setup, it doesn't happen every time. It does not happen every time. It takes time to happen. It takes time, and when it does, you need to be ready financially to take it. You need to be ready financially to take it. And you can see this. Let me even remove all of this. Now you can see what is happening here. Price is also building up, right? And probably by the end of this year or so, or even next year, it might even push again into this high. Remember, there is a key level here. Okay, remember there is a key level here. A key level of what? Or that it may not really be all that easy, because now we have a breakout structure here. So this high becomes a good high, but then on top of that high, there's still a available key level. So it's not gonna be that easy, because you might actually consider taking it from this high to this low. So it's not gonna be that easy compared to what we see happening in the past. Okay, so we're gonna have something like this. Okay, price could even mitigate this key level, and then we're going to see something like this from this point to this point, from here maybe push all the way up to this point because of those key levels lying above this particular one. This is good. I can even do this, but then remember that there's a key level above. Okay, so that is just it. So this will be all for now, guys.